Hey there, it's Trisha, and I want to go over the trades for Monday, Tuesday, and Wednesday. I'm going to try and get them all on one video, and you can check out the setups that we use at www.easyemintrade.com. Very conservative way to trade. We require confirmation on 3 charts with indicators before we ever take the trade. This is Monday, July 6th, and we actually took a squeeze here at 11 minutes after 10. We got in at 886.25. We got our +1, then I moved my stop to break even, and so I got stopped out at break even. But also I wanted to point out that you did have one firing off here on the 512 as well that you could have taken. So it's just your preference. We could not take this trend line break here, or I wouldn't take this trend line break here, because my indicator was not in alignment until this bar actually closes. So this would have had to been the bar here that broke the trend line break in order for me to take an entry. So this was not a valid trend line break entry for me according to my criteria and my rules, which I mean you guys have in the ebook. They're pretty detailed on what I'm willing to do and what I'm not willing to do. If you had taken the entry off the 512 tick chart, you would have gotten +1 and +2. Next trade we took was at 115 and took a squeeze long off of the 512 tick chart, got in at 890, and got my +1 on all my contracts. Knowing that the area is above my head, I'm going to be less willing to sit through back and forth, back and forth. So with that area above my head, I was willing to take my +1 on all of my contracts. We had a trend line break here at the same time, and it would have worked out to be about the same. I think maybe you would have gotten +2. But again, totally up to you which you prefer to do. I'm always going to get in off the smaller tick charts because my stops are not going to be as big initially. This squeeze here firing off at the same time, well, a little before that, we could not take because our trend indicator was not above 20. It was way down here. So that would have been something that I was not willing to take, and I did not take. That's why I took off the 512 tick chart. And this is the first trade that we took on Tuesday, July 7th. This was at 10:37. We had a squeeze firing off below this floor pivot, and so we decided to take it, thinking that we would possibly drop, to the next area of support. Failed to do so, started to bounce, so I flatten and cancel with a loss of half a point. And what I do is, I have an initial stop set when I take a squeeze, but my intention is that it never gets hit. If I see the trade going against me, I'm going to flatten cancel. So that's typically what I've been doing on the squeeze entries. The next trade was at 11:42, and this is the squeeze that I took here. And actually, I wound up break even on this trade. Didn't start to drop. We expected it to get down to our low from the previous day, and we didn't get there. But when it started to turn against me, I flattened and cancel. The reason why I would not take this initial squeeze is that my indicator here was not in alignment to take a short yet. So I'm not going to typically jump the gun because I think it's going to cross, because there are many times when you think it's going to cross or it's going to get in proper alignment and it doesn't. So unfortunately, learning the hard way, losing money, now I'll just sit there and wait for it to complete, wait for that bar to complete, or whichever bar to complete where it's going to go in alignment, and then I'll look for an entry. Because there are many times where you think it's going to cross and then it just kind of curls back up and it doesn't. And the next trade we took was at 110. It was a trend line break. We have our close above our trend line here. I enter in half a point above that bar, and I get in at 885.75. And actually took 2/3 at +1, and then 1/3 I was break even. And the reason why I chose to do that was we have our moving average right above our head, and typically we do hit our head on, in this instance we would hit our head on that and then pull back, and that's exactly what happened. Or sometimes you can just get up to that area and just go sideways. So knowing that that was above our head when we took it, we had a strategy that we were not going to sit through the sideways. So that was what we did on that particular trade. And I do choose a half a point above or below when I'm getting in on a trend line break, because you'd be surprised that extra quarter just saves you from getting sucked into a trade just to have it go against you. For example, on this day here, we had 3 different trend lines that we were sitting there with our order in place with a using a half a point above or below, and luckily our order was never taken, because then price went in the opposite direction. But had we been using a quarter above the setup bar, we would have been sucked in just to wind up with a losing trade. So I really am liking using that half a point above or below on the trend line bar. Now I don't do that on the squeezes. That's strictly for the trend line breaks. And these are the trades for Wednesday the 8th. And first thing in the morning, you can see that we were in a sideways range here. So we set up a range. We set our resistance and our support. Our support actually was the close from the previous day, which would be Tuesday. So we had been going up and down, up to resistance, down to support, and so on. So when we came down to support here, and this was just about 10 o'clock, we have our indicators both rolling over to the upside at the same time at a support area in a range. So after establishing a range, we were willing to take that, knowing that we were only going to probably get up to just about this resistance area. Actually got a little above it before we pulled back, but the target on that was just under that for all contracts. So got +1 on that. Then we tried to go short at resistance when everything was rolling over here, and dropped, never made it down to support, so went sideways a little bit, and what I did was flatten and cancel on all my contracts at -3/4 on that one. The next trade we took was at 11 o'clock. We actually were able to capture most of that move. We had a squeeze firing off on our 512, and so we took it under this, because what we wanted was, we were waiting for it to break under this floor pivot midpoint, and so we did. We got in at 876.25. Now this was the low from the previous day, from Tuesday, and typically we don't slice right through that. We typically are going to go sideways there and usually get a bounce, so we were prepared for that. So we weren't expecting a whole lot out of this trade, and just happened to be on board when it actually continued to the downside. I actually got out too soon. I got out just before the low here, unfortunately, so I didn't sit through that, thinking that we were going to get a bounce. So that'll teach me, just be patient and see what actually happens. But anyway, many of the people in the room did not get out, and they wound up with +1, +2, +3 if they entered off the 512. And we also had a trend line break, which, like I said, anytime I can get an entry off one of my smaller tick charts, I'm going to choose that over the trend line break. Again, that's just me personally. That's my choice of what I like best. But this trend line break actually happened at the same time. You would have gotten in at 876.25, same exact entry as the 512, and you would have just trailed your stop half a point above each of these bars. You would have got your +2, +4, and then been trail stopped out on this bar here for +3 3/4. And this is a trade that I called before I went to lunch. I said, if we get a squeeze firing off below this floor pivot, take it, as long as everything's in alignment. And they've got their checklist from the ebook, so everybody in the room knows what they're looking for, and we go over it. I'm a nag, but anyway. So they took this squeeze here and worked out for +1, +1 3/4, and then would have moved their stop above a pivot here, quarter above a pivot, and been stopped out on the remaining contracts at +1, knowing that this area below them is likely to be an area that they would get a bounce, which is what happened. And the last trade that we took was at 104, was a trend line break. We got in at, didn't write that on there, sorry about that, 870.25, and got +1, +2, And what we did was we made our final target just below this area here, which was just below the 50% retracement area and also right below our moving average. And so on our final third, we got 3.5, expecting, of course, that we go sideways at this area or we get a pullback, and that's exactly what happened. So +1, +2, +3.5 on that trade. So those are the trades that we took for Monday, Tuesday, and Wednesday. And if you'd like to check out the setups that we use, we give detailed criteria on when you're going to get in and why you're going to get in. So check them out at www.easyemintrade.com.